And welcome, it's Mary Ellen McGonagle here with your Friday afternoon weekly Edge show. Let's jump right in. Today, as usual, we're going to take a look at the broader markets. The S&P 500 powered above 5,000, NASDAQ acting quite well, and then also beyond. You want to be aware of where that relative outperformance is, sector rotation that may be shaping up, and more. Also, some of the headline news that drove price action last week, of course, all about earnings as it relates to those biggest movers, but we'll look at some other intel as well. Last up, viewer question of the week. And with earnings, we're seeing a number of stocks really pop. Some of them take off, others pull back. I'll give you two examples, and we'll take a look at what to be on the lookout for to tell. Should you wait for a pullback to buy that stock that has just jumped on earnings, or should you hop on board? So let's take a look at some of that news from last week. We did see interest rates remain rather elevated, and a lot of that having to do with 10 separate Federal Reserve officials out speaking at public engagements. And for the most part, their comments were similar in the sense that they don't see a real need to cut interest rates anytime soon. Also, we did see areas of the market really jump out. Semiconductors regained their uptrend. Software broke out. We'll take a look at that, all amid a period where the economic calendar was very light for the week. Now, it will pick up next week. Key inflation data is going to be reported. Core CPI and PPI data, we may see movement depending on how those numbers come in. And as mentioned, earnings reports did set the pace, primarily for those biggest movers, both to the upside and the downside. So from here, let's go ahead and take a look at those markets and see where did we close for the week. Here's a daily chart of the S&P 500. As mentioned, we did today move above that 5,000 level. Oftentimes those round numbers, advances above them, bring in more than average by way of excitement, and we did see the markets trend higher beyond that. On today's view, we can see that the RSI and MACD, both momentum indicators, remain above their neutral levels and uptrending. So the near-term uptrend in the broader markets is pretty firmly in place. Let's take a look at the underlying sectors in the S&P 500. This is a 2-month daily price chart view of the 11 sectors in the S&P 500. I've added a relative strength indicator and sorted it in descending order so that up here in the forefront are your stronger sectors and down below in the lower quartile, your weakest areas. And here we are with healthcare up here at the forefront, a lot of that having to do with stocks such as Eli Lilly coming out with strong numbers and experiencing a nice rally. Moving through technology, top performer of the week, and we can see that this group has now advanced to a new high. Lots of strength and vibrancy. I talked about semiconductor and software. We'll take a look at those group charts as well. And as we move through, industrials are also up here at the forefront. This is another area that is seeing vibrancy primarily due to strong earnings from select underlying areas. I'll share with you one area in particular that's really helping drive the industrial sector higher. As we move through, consumer discretionary was a top performer this week as well. Take a look at this downtrend reversal that took shape, the move above these shorter-term moving averages. Really attractive is this black line up through the red on that MACD, indicating a new uptrend in the discretionary area. Like to see that with some of these retailers up there moving on strong earnings. And down here in the weaker areas, you want to be aware, utilities, real estate continuing to underperform. And also we can see basic materials and energy down here. All about making sure that within your portfolio you are heavier weighted among these areas that are exhibiting outperformance. due to strong earnings. Now beyond, we can take a look at some sub-industry groupings within these sectors, again, really zeroing in on where those money flows are going. And so up here, I talked about software. This is IGV, a tech software ETF. Nice 2-week base breakout this week. And again, a lot of companies beneath are reporting strong earnings, which in turn is pushing stocks elsewhere in the group. I'll give you a prime example is Fortinet. FTNT had this gap up and subsequent pullback and then rally. But in the end, we did see other cybersecurity stocks on the move, primarily name that has been on my MEM Edge list for quite some time, and that is CrowdStrike, CRWD. We did add the stock prior to this base breakout into a nice uptrend, and it remains a leader in not only cybersecurity, but also in the software group. Another area up here at the forefront in technology, I mentioned semiconductors, and we can see this nice base breakout shaping up, new uptrend signaled by that MACD crossover and the RSI trending upward. One of the big performers here is MPWR, monolithic, strong earnings, gap up, heavy volume, all about AI-related chip demand. And some of these other sub-industry groupings, I talked about consumer discretionary. Let's take a look at XRT, that retail ETF, exhibiting nice momentum, forming the right side of the space. Nice volume here as well. And again, that nice black line up through the red MACD crossover amid an RSI that is trending higher. Another sub-industry group to be aware of that's really exhibiting weakness is KRE. This is the regional banking ETF. This is a drop down on the prior week due to a New York bank that really cited commercial real estate as being a drag on their holdings portfolio. In turn, that spread throughout banking where it was fear-based selling among the group. If you own names in this area, you'll want to stay on top of that potential continued deterioration. From here, I mentioned we'd talk about stocks after earnings, and we're seeing a lot of names pop, that particularly those that are coming out with good numbers and guiding growth higher. And SMCI is a prime example. Let's take a look at a daily chart here, and you'll see here is that pop into a nice uptrend, and you can see it's been a real winner here of late. One thing I would do when these stocks begin to move higher is add a 5-day simple moving average. That's this blue line. Oftentimes pullbacks to that 5-day moving average can be an ideal buy point. And what we're going to do is compare that to DECK that came out with earnings last week, gapped up, but instead of continuing on higher, it pulled back. Now, while we're looking at Deckers, let's take a look, because this is one of the names from my MEM Edge report. We added it on this downtrend reversal, and in my report last Sunday, I suggested to not add to the position. I was on the lookout for a pullback, and using the daily chart, here's why. If we look at this RSI, you can see that it get up above 80, and anything above 70 is overbought. But when you get up above 80, that is truly overbought. Oftentimes you will see a pullback. And then also that MACD up here in the upper reaches of its potential area of movement. If we go back to this gap up here on earnings for Deckers, you'll see that the momentum indicators were at a much lower position from which the stock could then trade higher. And another metric that we can look at, let's take a look at SMCI, also with that 5-day moving average that I talked about. And you can see at this point in time, we are now at 93 with that RSI. So at some point in time, particularly this week, the MACD is up in this upper quartile, and most likely I'm anticipating a pullback next week, or at least a period of consolidation. From here, you will want to take a look at the intra-day chart as a guide after this strong move. So SMCI, I'm sharing with you a 1-hour price chart. Here's that gap up that took place back here January 19th, and the stock has been trending higher ever since. Let's take a look at some of the metrics relative to the momentum with SMCI on the 1-hour chart. You can see the move of that RSI into positive territory and that MACD crossover indicating a new uptrend. From here, I will mark this up and share with you the dynamics that would have kept you in SMCI, even though it had already had a big move. On the 1-hour chart, you can see that the RSI remained up here in positive territory, unlike this break here when it trends below on that 1-hour. Oftentimes it's a good near-term sell signal. Also with SMCI, you can see that the MACD remained up here in positive territory as well above this net neutral. Now let's go ahead and compare that view to DECK, which, as we know, pulled back after its gap up. Using the 1-hour price chart, we can see a different dynamic taking shape here. Here we are on that 1-hour on the day of its gap up, and the stock did advance. However, that RSI did trend below that net neutral 50, and you can see that MACD, a sharp crossover. But also look at this volume on this pullback here with this stock pulling back on above average volume, and the momentum for the most part has really flattened. So you can compare that to SMCI, where it still had that nice high momentum and looked poised to trade higher. That's it for this week. Have a fantastic weekend. I'll look for you again here next Friday afternoon.